Saturday, 27th of May, 7 minutes to 2 in the afternoon in Australia, video blog number 37. If you are interested in cryptocurrencies and you woke up this morning as I did, you will see that we are in a sea of red across the whole market. And I did mention in a previous video that I was actually quite happy with the pullback or initial pullback from Bitcoin, but even overnight we've seen another massive drop of almost 500 US dollars, and it has bounced back a little bit. But the thing is, it is inevitable, and we were definitely due a major pullback, something like this. And I did say in the last video that we've been spoilt with this massive inflation and lots of energy and excitement, and we had some massive investors from around the world put in their money, and there's no doubt that some of these big players are going to influence the small bubble of the crypto world as it is, because the reality is it is actually a small sector until the mainstream actually gets involved. And I was watching Cliff High video yesterday about how he's talking about bubbles, and he doesn't actually believe that the cryptocurrency sector is a bubble as yet, because it's just not mainstream enough, and there's not enough influence and not enough saturation throughout the market, which makes a lot of sense. And I think the good thing is about these type of scenarios is that it's an opportunity to sit it out, and if you are in for the long game, then you can obviously buy a little bit more. Now, the webbot also predicted a whole heap of certain circumstances, and Cliff High was talking about a very aggressive crocodile teeth type of activity through the cryptocurrency world for a period of time. So we are, and I've seen that in the last month. All I saw was the prices going up, and now in the last 2 or 3 weeks it has been very, very up, down, 20% up, down 5, 10, 20%, each day, sort of a bit of an emotional roller coaster. So this is where it pays to turn off your phone and not look at your portfolio every minute. Now, in saying that, we've got this massive downward slide. Are we at the bottom? Possibly. I mean, you could look at some of these little graphs, but I always think there's a second wave of panic, and some people haven't even logged on yet to see that their portfolios have dropped, and some people will consolidate and hope for it to drop another 5 or 10%, and then they might buy in again. That's not quite my scenario, in the sense that that's not my scene. I tend to just sit it out these days because I just want to maintain my portfolio. But I also got this cool little email, and I've signed up to this guy. I think his name's Luke Burgess, and I keep getting this Wealth Daily email in my inbox, and I haven't decided to remove it yet because I actually get a little bit of value out of what he was saying. And what he was talking about is, will millennials destroy Bitcoin? Now, obviously he's got a little graph here, and he shows this exponential, which most of us who are in cryptos would know that it has been even a little bit more aggressive than this, especially in the altcoins. It was almost vertical there in March and April, something, an unprecedented climb. Now, what he's gone on to say is that he's talking about analysing who's actually invested in the current sector and where is all the money coming from, where's all the energy and the interest. There's no doubt there's a lot more corporate interest coming in, but they're tending to have a little bit more of a spread, diluted focus across different blockchains, and they're looking at implementing different systems, and if not, creating their own blockchains, and etc., etc. So Bitcoin at the moment is sitting on its own. It's not necessarily a currency, but it is more of a speculative investment at this stage, because the reality is that it's not quite being used on a day-to-day basis at a higher level or at a mainstream level. So you can't actually say that it's a currency. So there's going to be some very aggressive speculation and adjustment to the market due to these factors, especially in the early days of Bitcoin. It's only 7 years in, and that's nothing in the world of new tech. So what I wanted to do is just quickly read through this email, and I'll just start here. And he was talking about who is involved in the current ownership of Bitcoin. Where's all the energy? Who are they exactly? So, well, according to a recent survey, approximately 60% of Bitcoin owners are under 35 years old. And the biggest sector here is 40% between 25 and 34. You got 21% between 35 and 44. I'm in the 35 to 44 bracket. So, are they millennials? They are younger. They're not in the 60-year-old bracket. Not as yet. There's only 2% apparently. I don't know the depth of this survey, but it's here. Now it continues on. In short, most Bitcoin buyers are millennials, and that's all we need to know about them to make it an inarguable point. The fact is this: a 35-year-old speculator intrinsically has much less experience in risk management than a 60-year-old, in theory. And remember, most Bitcoin owners are mostly speculators as opposed to users of the product. And remember, they are speculating on a currency which is among the most volatile of financial instruments. And remember, they're speculating on what essentially amounts to a new experimental currency. All of this considered, Bitcoin looks to me as one of the most speculative financial instruments available, except for Bitcoin's derivatives. Yes, believe it or not, Bitcoin has a futures market, and there are products that can offer even more risk. On its perpetual Bitcoin USD swap contracts, BitMEX offers up to 100 times leverage. I'm not too familiar with those things, but I'll look into that. But to really understand why I think Bitcoin is eventually headed for a crash, let's consider the most famous market bubble in history. And then he goes on to talk about a Dutch tulip mania in the 17th century, where everyone was going around and buying up single tulip bulbs for 10,000 guilders, and it was just going crazy. The energy within that market was just ridiculous, and a whole heap of people were buying tulips for ridiculous amounts of money, and then overnight it pretty much dumped. Now, what he was saying is that even though this tulip mania did subside, it didn't actually affect the flower industry. So you could almost say there's been quite a few of these circumstances. I think diamonds could be considered sort of in a similar category, and there's been others. And there's always this big bubble of energy, and then it sort of subsides. But there is always a downside to the up, and we can't have massive ups without a massive deflation of some sort, or of energy in particular. So, but does it affect the overall market and the sector? It doesn't. So what he does is he goes on and talks about the tulips, and I won't bore you with that story, but my point is the tulip as an individual product lost favour, but the collapse of the tulip market didn't completely kill the flower market. In the same way, I don't expect a collapse of Bitcoin prices to completely kill the blockchain-based currency market. Bitcoin is simply one product of many blockchain-based currencies. A crash in Bitcoin would throw a wrench in the blockchain-based revolution, but there is little doubt that blockchain technologies are the future. As we speak, every major central bank and large financial institution is researching how to implement blockchain into its own systems. It has already been proven to eliminate verification redundancies and improve security, and new applications are being tested every day. So while I think Bitcoin itself could eventually be headed for a crash, the blockchain technologies that are supporting all these digital currencies seem set for unprecedented growth. I like what he's written there. There's no doubt we're going to have this massive downer. That's just life, and I think there's going to be a massive consolidation. And I think we're most likely seeing it now, and I think it's going to be a little bit up down for the next couple of weeks. Could even go down a little bit more. So it might be a time to be really patient and collect some more funds and top up your long-term investments and just keep your eye on there. And so I think it's the end of the day with all of these things. Don't invest unless you're willing to lose it. I think it's one of those sort of catch cries that you hear at the moment in regards to any risk. There is an element of risk. I mean, I'm not telling anyone to go and invest their money because, as you can see, it's a very volatile market at the moment because there's a whole heap of influences that are causing massive changes in the market and very, very quite aggressive changes in the market. So that's all I wanted to share with you today. Just, we're having a bit of a flat period, a little bit of an up-down, a bit of an emotional roller coaster. I think put your helmet on and just relax, sit back and just analyse it and get a feel for what's happening. And I've been in the chat rooms and just seeing what people say, and it seems actually pretty positive. especially in some of the ones I've been in. So it's all good. Have a good afternoon, and tune in to the next video.